When it comes to property investing, there are so many different strategies that you can use. And on this channel, I share with you lots of different strategies that I've used over the years. However, which are the right strategies to be using in 2021? In this video, I want to share with you the 3 that I'm using this year. If you're watching my content for the first time, my name is Saj Hussain, and on this channel I share with you my 15 years of property investing experience to ultimately help you get further faster in your property investing journey. When it comes to property investing strategies, as I said, there's so many different strategies. Which is the right one? Which is the right one to use? And this is the million-dollar question. And I spend a lot of time with people, potential investors, and even experienced investors of honing that strategy and getting it right for them to be able to get the best possible results for them. And often people ask me, Saj, which strategy is it that you're using this year? Well, let's talk about the 3 that I'm using this year. Strategy number 1 will come as no surprise, which is professional high-end HMOs. I've been in the HMO space for about 10 years now, and during that time, the type of property and the finish of the product just has evolved massively. I remember those first pine beds with the blue stripy mattresses compared to what we have now. They're chalk and cheese in terms of difference, but essentially it's shared accommodation for 5 or 6 people sharing a house. In terms of the facilities they get now, they're much higher, much better quality than they were when we first started. Now we've got this model down to a cookie cutter approach in terms of what we want. It's finding 3-story Victorian Edwardian style houses that are fairly large in terms of square footage that allows us to reconfigure that house to work really well for a 6-person HMO. The challenge is, in Birmingham, we now have Article 4, which means that we can't just now take any family house and convert it to a HMO without now going through planning. It doesn't mean we no longer want to do this particular strategy, but it's a little bit different. And of course, the competition's a lot higher than it was when we first started. And so although this is something we're still looking to do, it's no longer our core focus. We're moving away, and I'll talk about the other 2 strategies in a moment. But the type of properties we'll still do will either be existing HMOs that are already effectively, they've got the planning in place at existing HMOs, and we will take those and repurpose them to much higher quality, much better type of HMO property accommodation. Alternatively, we'll look for the larger type of houses we're looking for that's in the right location, and the location is absolutely key when it comes to high-end HMOs for us. If it's in the right location, then we're prepared to go through the process and get the planning approval as well to be able to create what we want. Because we know with each one of these houses, we will typically create about £100,000 of equity, pretty much get all our cash back out, and also end up with about £1,200 to £1,500 net cash flow each month. Now that's not a bad position to be in, which is why we want to continue doing these, because this model really works for us. Having this cookie cutter approach, we can just repeat, rinse and repeat each and every time. In our HMO letting agency, we have about 500 plus rooms that we manage across Birmingham and some of the surrounding towns. And what that does, it gives us a massive amount of experience and knowledge and data in terms of what works really well, what price points work well, where there's a demand, where there's peaks and troughs throughout the year. Now this is really important because often I'll speak to investors, particularly those, for example, based down in the southeast, looking to do HMOs in Birmingham. They may already have been doing HMOs in London, and they've got that experience. They can rent a room pretty much anywhere to anybody. There's just so much demand and there's a shortage of accommodation. But that's not the case in Birmingham. Birmingham is very different. It's having the right type of accommodation in the right location, pitching it at the right price point, which is what makes it work. And that's why we're quite fussy about the type of properties that we will look for and the type of properties that will convert to HMOs or reconfigure or redesign or renovate existing HMOs to ultimately create the product that we have today. If you've not already seen the type of HMOs we've done, we'll link up a video just over here for you for one of the recent ones we finished to give you an idea of the type of finish that we create. Really what we look for, what we try and create is like a hotel, like a 4-star hotels type accommodation that you would see, and you have that experience within a HMO, which means we can charge a higher rent, end up with a higher valuation of that particular property. In terms of the purchase price, how much we're looking to spend, really we don't want to spend anywhere more than £300,000 as a purchase price. Now ideally around the 250 figure, but we'll go up to about 300 for the right type of property if it can work for us. And if you're out there sourcing property, then make sure you hit me up if you've got anything that fits that bill. And if you've already got a property right now that you're thinking, okay, that might work for Saj, again, ping me a message and I'll be open to having a chat with you. This is the type of property you're looking for, and this is our first and core strategy. But as I said, we're moving slightly away from this because this is no longer our core focus, because we've got a good healthy portfolio. Now it's about moving on to some of the other strategies. Just before we get into strategy number 2, if you enjoyed this content, then do me a favor, absolutely smash that like button and subscribe to the channel as well. I spend a huge amount of time every week creating this content for you, ultimately to be able to help you. And it just amazes me when I look at the YouTube stats, the number of people that watch my videos that are not actually subscribers. And if you do subscribe to the channel, it just really shows some appreciation for the work that I'm doing for you to help you. But also it means that YouTube will then show this to more people, and it means ultimately I can help more people in their property investing journey. Our second strategy is driven by a number of different factors. Some of those things happening right now in the marketplace. So for example, the residential market, it is just on fire. The prices are so high, trying to buy property is very, very difficult. If you're selling property, it's a breeze. I've got a number of properties that are going through sales right now, and they're sold just like that. Put the for sale sign up and there's people rushing to buy those particular properties. So selling is very easy, buying is a bit of a challenge. So that means we need to be thinking about what's the alternative way, what else could we be doing to make sure that we're growing the portfolio, doing the numbers we want. Because we have two types of outcomes with our strategies. One is we want to build property that give us good income, such as the HMOs we were talking about in strategy 1. But the other thing we want to do, we want to sell property and have chunks of cash that come back into the business as well. So these two things, trying to get a balance on those, so there's a good healthy rental income, but also there's cash coming in from sales that happen from properties. But the only way we can sell is we need the stock in the first place. So how do we create that? Well, this is where strategy 2 comes into its own play. Right now is the perfect opportunity to be taking commercial property, not all commercial property, but certain commercial property, and converting those to residential. This is something I've done before, and now we're looking to ramp that up and do more of that this year, because the other thing that's happening, the planning rules are changing. It means it's going to be much, much easier to do this, particularly 1st of August is a key date where some of the changes will happen. Some of these changes have already started happening from September 2020, and they're kind of transitioning across. There's a number of changes that are happening still right now, and they'll continue for the rest of the year. But August, the 1st of August is a key date for us. So what we're doing, we're looking for certain types of commercial property up to about a maximum of 10,000 square foot. We're not looking for massive giants. Even 10,000 square foot is quite a large commercial property, but you know, it might be 3, 4, 5, up to 10,000 square foot type of property that we can convert. Now it needs to be the right type of property. What's the right type of property? The right type of property, or what's going to lend itself to these type of conversions, is something, for example, that's already got windows in the right places, so there's a lot of good windows. So the type of property that maybe is not going to work, so I'm just looking out the window here, we've got a huge commercial building here that came up. I was interested in looking at one point. It's got a massive deep shop on the ground floor, which is now closed, and it's got quite a bit of space above it as well. The challenge is with the shop on the ground floor, because it's a closed off space, you can't really convert that to residential very easily. You can't get the light in there, you can't get the windows in there very easily, so it's not really very practical. So it's looking for the right type of properties, and also the location is key as well. These two things need to work hand in hand for this strategy to work. So for example, you could have, I remember speaking to somebody a couple of years ago who was looking for office to residential conversion, which I guess is a similar kind of strategy to this, where they found an office building, but it was literally middle of an industrial estate. It was an office that somebody had built to go with their business that was in that industrial estate, and they wanted to take that and convert that to residential. And I was trying to explain to them, look, you've got to think about who's going to want to live on an industrial estate. It's noisy, dirty, it's not going to be practical, it's not ideal. So it's about having the location right to make this strategy work. Now, with these properties that we convert to residential, we open to sell some of those, we open to keep them as well. Ideally, when it comes to these type of properties, mostly it's apartments that you're creating. And with apartments, I like to try and contain them in blocks. What that means is I want to be able to keep the freehold of the property rather than breaking them up individually. And I know if you're in London, for example, and down the southeast where the prices are much, much higher, it's quite difficult to buy these as freehold properties because you just need to put so much money into them. But here around the West Midlands, my preference is to make sure we've got the freehold for the flats. So it means that we've got longer term control in terms of what's happening. Because we want to create quality accommodation, the end values we want to try and push up as high as we possibly can. And the way that's going to happen is for us to be in more higher value areas. So really in the cheapest locations, this doesn't really work so well. So if you've got very cheap commercial property, you think, great, we can pick this up very cheap, we can convert it, and the cost of conversion is going to be the same whether we buy in a cheaper location or whether we buy in somewhere a little bit more expensive. But the end value is the key thing. What's the end value we're going to end up with? And in the poorer areas, we're really going to be limited in terms of, you know, what we can achieve there and who the end buyer is or who the end user, the tenant is going to be for that particular property. My preference is the higher end of the market. I just think there's more money to be made there, there's better margins there, and that's where I prefer to be. And you know, again, if you've got commercial property that you're thinking, I've got something Saj might be interested in. I'm really open to having a chat. I'm even open to having joint venture partnerships and looking at how we can work together on projects as well. So if you've got a commercial property you're thinking that could fit the bill, then make sure you ping me a message. Now let's jump into strategy number 3. Strategy number 3 is new build property. New build in terms of new build houses, new build apartments. Now again, this is something I've done before and I'm really keen to do more of this, because in a challenging market like we talked about, where it's really difficult to buy regular houses to be able to add value or convert them because the price is so high, you need to think about where can you create the value. So rather than thinking about, can I buy a regular house that's say worth £100,000, can I buy it say at £75,000 or £80,000, buy it at a discount? When the market's hot, it's more difficult to do that. So my focus then shifts, okay, so how can we create that? How can we create that value that doesn't exist? And often when you're building something, you're creating a margin of 25 to 30% of the end value will be essentially your profit. And that's the figures that we look at. It's around 25 to 30% profit margin on the GDV, i.e. the end value of that particular development. So we're creating that magic 25% number that everybody aspires to be able to achieve out of a property by building something out of the ground that doesn't exist. Now with this particular strategy, and again when we talk about buying property, when it's so hot like this, it also has a knock-on effect in terms of development sites. So the sellers of these particular properties, they become I was going to say greedy, that's probably the wrong word, but it's, you become a bit more ambitious in terms of what they can probably achieve. And let's face it, if you were sitting on a nice piece of land somewhere that I thought was a great development opportunity for somebody, you'd want to get the best possible price as well, right? So yeah, we can understand why people are trying to hold out, but some sellers have been a little bit unrealistic as well. And often when we're doing this type of marketing, we're looking for these type of property, and make sure you watch all the way to the end, because I'm going to explain how we're looking for these properties, for these 3 strategies, and also how we're funding them as well. But when we are finding these particular sites, what we would sometimes do, we'll have a conversation with the owners. It doesn't really turn into a deal right now, but it doesn't mean it's no, never. It's just no, not right now. So often it's about following up and making sure you're communicating with them, and their circumstances might change, so they might become more flexible. Sometimes something else might happen within the transaction, makes it more viable in terms of the number of units that you can build there is increased, or something like that can sometimes turn something that was non-viable at the beginning to something that becomes a little bit more viable. When it comes to the type of sites that we're looking for that's going to meet the criteria, for me it tends to be within about 45 minutes from central Birmingham. If we can get to it within about a 45-minute time frame, that works really well. I'm not really interested in projects at 100 miles away, 200 miles away. I want them to be near enough for them to be on top of it so we know what's going on. And to be fair, actually, I don't really visit the sites that often, but it's a sense of security and comfort for me that I know I can whiz out there and go and have a quick look if there's an issue, something we need to deal with. It's not a day trip away to be able to get to it. And so location is absolutely key. The other thing is, I mentioned about the profit margin. That's what really drives whether it's going to be viable or not, that 25-30% that we're actually looking for. Now, if the site has planning permission, it definitely makes things much easier, but it also means that the sellers often want more money because they think they're ready to go. They don't often think about all the other things that you need to deal with, the hoops that you need to jump through to be able to make it work. And if you want to know about some of the things that we need to deal with when it comes to building new property, then make sure you watch this video up here. We'll link it up here where it's one of the projects that we did at the beginning, all the hoops that we have to jump to be able to get it off the ground and get it going. Just because you've got a piece of paper that says you've got planning permission, it doesn't mean it's good to go. There's just so many other things that you need to deal with as well. So if planning is there, it certainly makes it easier. But I'm very open to work with owners of land and site and buildings where they haven't necessarily got planning, but as long as we can work with them, we can put something in place, we can get the planning approval and then purchase. And once we've got the planning in place, i.e. do a purchase subject to getting the relevant planning, and then that works as well. Now, obviously, we're not going to spend all this money, thousands and thousands of pounds going through the planning process unless we have a degree of confidence that we know we'll be able to get it through planning as well, and we've got all the figures agreed with the owner. In terms of the land, it could be brownfield, it could be there's already a building existing there that might be demolished and we can clear the site and rebuild. I'm quite open to looking at those as well. So really the location is the key, the profit margin is another factor that drives that as well, and then ultimately what we're going to be able to do with it. Whether it's houses or apartments, again, those things I'm open to as well. So these means that there's some structure to the type of property you're looking for, but there's a little bit of fluidness there as well. So, it's not necessarily we only want to build apartments or we only want to build houses. It's really wherever we think it will work. We're quite open to that. We're location driven, we're profit margin driven as well. So, again, if you've got a site, whether it's a piece of land that you think that could work, or you own a building that you think actually something else could be built here, again, reach out to me and we can discuss how that would work for us working together on that. So I've talked about the three strategies I'm using in 2021, which is HMOs, converting commercial property to residential use, and also new build property as well. But how am I actually going about finding these? Well, there's a number of different ways we do that. Our preferred method is direct to vendor marketing, and what that means is we're writing letters, we're reaching out to people, we're finding people on LinkedIn, on Facebook that have owned sites or property that we're interested in having a conversation with, and we reach out to them, we write to them, call them, email them, and really starting off a conversation about their property if it's something they're interested in maybe selling or working with us on. Because as I said, it doesn't necessarily have to be a straightforward purchase. We're quite open to working with owners of properties as well to come up with a win-win solution in terms of something that would work for them and work for us as well. The other way, of course, is there's lots of people that I know. I've got a big network of people because I've been doing this a very long time, and there's a number of sources there as well. Unfortunately, lots of people call themselves sources, but there's very few that actually deliver. So there's a number of sources that know us and they know what we want and they know our criteria, and I'm quite happy to pay fees for the right deal. I'm quite happy to pay substantial fees for the right deal, as long as it all stacks up and it all works. So there's people that bring stuff to us as well that are actively sourcing, and then we'll pick out stuff that we think is a right fit. And just being transparent with you, the number of deals that we get to see is actually quite a lot. Probably about 95% of them just get rejected fairly quickly because they just don't work, the numbers don't stack, they're not realistic, the location doesn't work, the type of property isn't right. Whatever reason it is, we dismiss it very quickly because it just doesn't fit our criteria. It's like having a sieve, we just throw them in and say, does it come out the other end? If it does, great. If it doesn't, we just dismiss it. So a lot of stuff does get dismissed, which means you need to have a huge pipeline of stuff constantly churning through. And we look through those. IDAS, who works with me and the team, they're there to help and support, making sure we get the right deals coming through so we can work on those. Then, of course, there's the existing relationships we have with estate agents and commercial agents that already know us and know what we want. And occasionally we'll get a call from them as well to say, look, we've got something like this. Is this something you might be interested in? And even stuff that's potentially going to auction, we might get to see before it goes into auction as well. So there's a number of relationships we have there. But these really are the three ways that we find our deals, which is direct. We're finding them directly ourselves. They come through other sources, or they come through agents, stuff that's already on market or about to go onto the market. You might be thinking right now, Saj, that's all well and good, but where on earth do you find all this money to be able to do these deals? And I haven't got a mountain of money that I sit on to be able to do these deals and say, yeah, we'll have that one, we'll have that one. It doesn't quite work that way. What I do have, I'm very fortunate to have, is lots of people that are willing to work with me, that have the funds. So really I have access to literally millions of pounds that I can turn to as long as those deals are right, because they'll work with me, they'll fund those deals, and we'll either borrow the money from them to be able to do the deals, or we'll partner with them to do a profit share. And when it comes to partnering, particularly with developments and bigger developments, and we're very open to working with vendors as well. So that means people that own the property, we're quite happy looking at them as potential partners in a deal as well. So they can come in with us rather than just having to sell the property to us. Because sometimes we'll meet people and say, look, I don't particularly want to sell this property, but we don't necessarily have the skill, the experience, or the money even to be able to develop it out. So it can be much more than it currently is. And we're quite happy to look at a partnership like that where we can work with people to be able to get the best out of their property. So again, if you've got property that you think could be fit, we're very open to working with you. And even if you've got funds that you'd be interested in investing with us, just again, reach out to us. I'm happy to have a chat. Those are three strategies that we're going to be using for the rest of 2021. However, we're in a very, very volatile market. There's lots going on, there's a lot of change happening. And in property, I say the only certainty is constant change. That means you need to be nimble, you need to be able to adapt. Whenever the market changes, you need to be able to change as well. There's no way 10 years ago I would have thought that these are the strategies I'm going to be doing in 2021. I don't really know. And I don't know which of the strategies I'm going to be doing in 10 years from now, because there's only so far ahead that we can see in the market and what's going on. And things might change, but right now, this is where the focus is, and this is what we're going to be doing for the rest of this year. Hey, I'd really love to know what you think might be the best strategies for 2021 going into 2022, because everyone's got a different perspective. I'd love to know what yours is. Pop it in the comment section below and I'll do my best to get through all those comments. What I've got lined up next for you over here is a great video that YouTube tells me that you're going to enjoy. But just before you do that, remember, if you haven't already, make sure you subscribe to the channel by just clicking my face down here, and look forward to seeing you on this next video just up here.